Hello, this is Howard Val with another live couch interview, and today we're going to talk about property and whether is your property on lockdown.
Sandy Ameer-Beg from Acclaimed Mortgage Consultancy. I've been an advisor for probably 25 years, and I've run Acclaimed Mortgage Consultancy for about 18 years. So I've seen a lot of changes in my time, but this really has to take the biscuits.
Loads of questions in, actually, Sandy. So are you ready for this?
I'm ready.
Are you? Okay, hang on. Let's see what we've got.
Then.
Okay. So the first one's coming from Claire Turner. Hi, Claire. She says, "Is now a good time to remortgage?"
Yes, it is, because on the basis that you're not actually moving house, so the lockdown side of it doesn't make any difference to you. So that's a lot of the work that we're doing at the moment, is remortgaging, clients wanting to lock into better deals with all the uncertainty. And as long as the amount that they're borrowing and the value of their property meets the quite strict criteria that we've got to uphold at the moment, then yes, it is a good time to look at remortgaging.
Stefan Cowan, from a lender's perspective, one of my colleagues has been approved for a mortgage and is now going to have a reduced income by 6k as a result. Where would someone in that position stand?
Okay, so lenders at the moment, moving isn't a possibility until the lockdown's over. However, lenders will still, so if they've got a mortgage offer, the lenders are looking at extending those by at least 3 months. However, if they have been furloughed, as you say, in this case they have, there's a material change. In other words, their income has reduced. So the lender has to be informed of that, and they would have to look at their affordability based on the reduced income.
Haley Burns, if you have a payment holiday, will the missed payment interest be added onto the remainder of the payments, or is there a timescale where you need to pay it back by?
Okay, so this one depends and varies from lender to lender. It will either be added to the end of the term, or you'll be able to sort of just increase your payments going forward just to make up the difference. So it will just depend. And just to add to that, because I've been asked this quite a lot, if you take the payment holidays, it won't affect your credit history.
That's good.
Yeah, because normally, historically, if you've taken a payment holiday, even though it's been agreed by the lender, it still does show, and it can impact on your credit history, your credit profile, whereas these payment holidays won't, and that's been agreed by the government and like the Financial Conduct Authority have been involved.
But it does extend the term of the mortgage, though, doesn't it?
It can do. So for some, it will be more comfortable to extend the term of the mortgage. I think it just depends on the payments that you've made, or it might be that you increase your payments going forward just to make up the difference.
Adam Jones. Hi, Adam. How is this affecting lenders' views on the first-time buyers?
There's been thousands of changes with criteria and the amounts that lenders will lend. And at the moment, as far as first-time buyers are concerned, the lenders are still happy to lend. However, the deposits that they want are larger than they were, 6 weeks, 2 months ago. So as a first-time buyer, people are going to have to look at raising slightly, higher deposits to get onto the property market. And that's where we are at the moment. And obviously, we hope that in the future that is they won't be as strict, but as of today, that's the criteria.
Right. So, but if you're on furlough, what would your income be?
So what they'll do, as far as the income's concerned, you can still apply for a mortgage, and the lender will only take the 80% of your income. So they'll take the reduced income when looking at your affordability. Although, that being said, there are some lenders, and this is, we work with the whole of the market, so thankfully we can approach lots of lenders, but there are some lenders that are being ultra strict about it. And even if you've been furloughed and they're looking at 80% of your income, they're also going to make an assessment to see, is that job likely to be there? And if it's something that they feel they're a bit uncomfortable with some lenders, thankfully not all, so we've still got a lot of lenders out there. Some lenders are being a lot stricter and might not lend in those circumstances. Speak to somebody like myself, we can do the shopping around for you, and that's what we do. Knowing the criteria, we know which lenders to approach and which lenders not to approach, and that's what we're here for. And I'd say it's even more important at the moment because the varying criteria from lender to lender, it's vast, and we're getting updates. I had an email last night, and within 2 days that was 500 criteria changes that have come on board, and that'll keep going up and down over the next few months.
What do you see as being the long-term effect this whole situation will have on lenders and their flexibility going forward?
So, being as old as I am, I remember in 2008, when we had the recession, lenders pulled back their lending, the amounts they would lend on properties, their criteria, and it actually feels very much like that, but completely, obviously, different situation. It feels a lot like that. So, I think in the short term, they are going to be a bit more cautious, but I think every business, whether it's a lender or a private business, they're going to be cautious with lending going forward. But one will hope that further down the line that will start to relax, just like it did before, and we'll be back to where we were.
Okay, got one from Jenny Reed, and she asks, are you still able to get agreement in principle, etc., to start the process if you want to move?
Yes, we can still do all of that. So we can assess income, affordability. If we're doing an official approval in principle with a lender, we can do all of that side of it. If you're looking at moving house, though, the thing that we can't do at the moment is physical valuations. Depending on the value of the property and how much you're borrowing, some lenders, or a lot of lenders now, are doing desktop valuations, but it does depend on how much you need to borrow, whether it will be do an approval in principle and then it goes on hold, or whether we can sort of push things further through.
Okay, hope that answers your question, Jenny.
So generally, lenders about a week ago started to take a really cautious approach as to how much they would lend in relation to the value of your property. And it went from anything from 60% of the value of the property as a maximum, but lenders went up to 85% as well. So you can see it's quite broad depending on the lender. I am aware of one lender that will lend up to 90% of your property value. However, their criteria is so strict, and unless you fit very nicely into that box, you probably won't be able to get that 90% lending. And as we've already touched on, lenders are looking at income, but they're looking at the lower income, the furloughed income. So again, they're happy to take applications, but it will be on your reduced income. Valuations, as I've already touched on, because no physical valuations can take part, it really depends. If you're looking at moving, that probably is one that's on hold, at the moment. You can get ideas of your lending, but actually to physically move, that's not going to happen in the short term. But we can start looking at that sort of thing. Remortgages, they're a lot easier at the moment, and that's something that's probably going to help more people. If you can secure onto a better rate at the moment, the way finances are, that would probably help more people going forward.
Yeah, because that is still the cheapest and best way of raising money, isn't it?
It is.
A remortgage.
Yeah, it is, and obviously we have to look at the whole situation to make sure it is the right thing for people to do. Just to also mention, the lenders are doing payment holiday, as we all know, the government announced that, and they did announce a 3-month payment holiday. The Financial Conduct Authority have also asked lenders since then to see if they'll extend it for 6 months, which will help from more people. So that's something that lenders are looking to do. We've also been told that credit card companies, other sort of unsecured lenders will look at doing the same, but on a short-term basis. So if you do have other credit, whether it's credit card, whether it's a PCP arrangement, or any of those things, speak to the providers. What you mustn't do is just not make the payment. But if you speak to them, they are agreeable, or more agreeable than would have been 6 months ago, to sort of look to make payment holidays or to help you along the similar lines to mortgage lenders.
Another question coming from Matt Lyons. Hi, Matt. Differences between equity release and home reversion.
Okay, so really different. So we're talking about standard mortgages. So equity release, when we talk about equity release, we're talking about clients that are over a certain age. So in theory, you can take equity release from the age of 55. So that's what we call a lifetime mortgage, to give it its official name. And the difference is with an equity release loan, you own your property 100%. You can borrow money against your property, and it only gets repaid fully upon your death. Home reversion is when you sell your property to a provider. They buy the property, but you have the lifetime guarantee of living in that property. So two very separate things, very, very different, and things that we would really sort of need to assess to look at the best way for you. But we rarely do home reversion schemes now, to be honest.
There's no restrictions on equity release.
So not dissimilar to the mortgage market, in that it's the valuations that are an issue at the moment. So it's all desktop valuations. And also, when we're working with older clients, the process in the past has always been that a solicitor has to have a face-to-face interview with an older client, just to make sure they understand the undertaking that they are, committing to. But again, in the equity release market, we've had a lot of people working really, really hard, and they're sort of changing processes at the moment so that we can still help our older clients who are perhaps, they might have an interest-only mortgage and they need to repay a debt, and that's not going to change just because of what's going on. So need this sort of lending. Or it might be that they were in the process of raising funds to help finance, help family, or just top up their retirement. So very different needs to what we're talking about, but for everybody's need is their own need and their priority, isn't it? So we can help those clients.
Go and speak to Sandy. There's the website there.
If I can give a bit of information that helps somebody, then hopefully we've eased somebody else's concerns and worries.
Yeah.
A little bit more info that I know, people that've got life insurance or income protection, please don't cancel things like that, because we do look through our banking, we do look through our statements to see what we can get rid of. Those are not things that you should be getting rid of, especially in the current climate. What I will say is, similar to what lenders have done, insurance companies are looking to try and give payment holidays on premiums at the moment. I've been told LV are definitely doing it, AIG are looking at it, and others will follow suit. So please hold on to those, because I wouldn't want anybody to ever be in that situation, and it would be worse still if you'd cancelled the policy.
And it's been an absolute pleasure. Thank you very much.
Thank you.
Please give her a call. So it's no charge. She's opening her virtual doors, and have a chat with her to just to guide you through the best way we can in this horrible situation. Sandy, I'll speak to you soon. Thanks a lot.
Thanks a lot,
Okay.
Howard. Thank you, guys.